Welcome to Chit Chat Stocks. I'm one of your hosts, Ryan Henderson, and I'm joined, as always, by Brett Schaefer. This is our Power Hour, our weekly Power Hour episode. This is our Power Hour number 160. Not that that has any important mark, but it's still earnings season, so we've got plenty to discuss. And on these episodes, we talk all things financial markets. We talk about our holdings. We talk about companies that reported earnings, basically anything relevant in the financial world that we think we should discuss. It's fair game here. And we go live for these shows on Thursdays at 2 p.m. Pacific time, 5 p.m. Eastern time. So if you ever want to ask us questions, head on over to YouTube, look up Chit Chat Stocks, and throw some questions in the comments. Brett, earnings season, how are you?
Feeling good. Companies I own have done solid this week, so can't complain. Although earnings bumps aren't really what we're doing over here. We're trying to find some good long-term companies to invest in. But yeah, there's been plenty of stuff in my own portfolio. We had people asking about a couple that we talk about on the show, like Coupang or Remitly, to talk about once again this week. They had some solid numbers. We have Google and Apple. They're Apparently, not only is OpenAI disrupting Google, they are now disrupting Apple, which would be quite the development. But there are a lot of people that asked us to talk about that as well. We have, and we can't not talk about it, although it's probably been talked about ad nauseum at the moment, the Buffett retirement announcement. And it looks like you got Uber earnings as well.
Yeah, plenty to discuss, and we're going to get to all that. But before we do, we want to talk about our friends at Interactive Brokers. Interactive Brokers is the professional's gateway to the world's markets. Interactive Brokers offers commissions starting at $0. Yes, you heard that right. On US listed stocks and ETFs with low commissions on other products, and there are no added spreads, ticket charges, or account minimums. Clients in over 200 countries and territories trade stocks, options, futures, currencies, bonds, funds, and more on 160 global markets from a single unified platform. Clients can earn interest rates of up to 3.83% on instantly available cash and pay margin rates up to 53% lower than the industry. So you can also earn extra income on your lendable shares. And IBKR's powerful award winning platform helps every level investor succeed from beginner to advanced on mobile, web, and desktop. When placing your money with a broker, go with a broker you can trust. Make sure your broker is secure and can endure through good and bad times. We use IBKR here at Chit Chat Stocks for their best in class international coverage, and you can too by heading on over to ibkr.com. Interactive Brokers is a member SIPC. I'll also give a shout out to Interactive Brokers. We did an episode on the business recently, and I think one of the best ways to describe Interactive Brokers is they don't cut corners. I think they do a really good job all around with the platform. But
Maybe customer support, but that's why those profit margins are so high.
let's talk earnings. I think the biggest thing here is probably the Google stuff, and there's a lot to unpack because it kind of feels like sort of a cat fight among big tech. Um, maybe we start with the GOAT himself, talk about this now, kind of get it out of the way. I'm sure everyone has heard, if you're in the investment world, that Warren Buffett has announced that he is going to retire, um, or at least step down as CEO. I don't know if I assume he'll probably remain chairman. I don't know if he explicitly said that at the Berkshire Hathaway annual meeting, but he's going to step down as CEO and he's going to recommend to the board that he be replaced by Greg Abel. I want to put some numbers on what a legendary run he has had as CEO. And I know these numbers get tossed around all the time, but I just think let's take a second to appreciate what happened here. So he compounded Berkshire's per share market value at 19.9% for 60 years. I saw popular Twitter account take a victory lap and say that it just goes to show that no one can do 20% over the long run, which is kind of funny. But that is a cumulative return of 5.5 million percent. The market over that time, S&P 500, did 39,000%. So to illustrate it, $10,000 invested in Berkshire in 1964, which I will say there are people that people slash families now, because it's been going on for so long, that probably got close to that. Maybe bots. There's always these like analogies where if you bought shares way back when and held them, I think if there's any stock where people may have actually held them for 60 years or families might have held them for 60 years, it's probably Berkshire since they did such a good job kind of being partners with the shareholders. Um, and when you go to the Berkshire Hathaway annual meetings, you actually meet a lot of people that have been shareholders just for a long time and they've built up a ton of wealth doing that. So $10,000 invested in Berkshire in 1964 would today be worth $550 million. He's built
Not
a lot
bad.
of wealth for people. And the stat that always blows my mind, if Berkshire Hathaway shares dropped 99% tomorrow, Buffett still would have outperformed the S&P 500 over his career. In fact, he would have almost doubled it.
It's the power of being the market, I guess, consistently having very, very strong shareholder returns. Did you watch the announcement live, Ryan?
Live, no. I saw the
Uh,
videos after the
dang,
fact.
dang. I turned it on for the end. It starts at like 5 a.m. over here, maybe 6 a.m., but not getting up that early on a Saturday morning. I'm not 80 years old. It was quite funny how he did it. I have the clip loaded up actually if you wanna should we play some of the audio? I know he talks very slow, so if it gets boring, we'll cut it out, but the,
Ah, it's slow. It's a slow clip.
yeah, maybe if we could play YouTube at 2x speed, but it's just funny how Abel so the person Abel, not I don't know, it's a very confusing word sometimes. He was sitting right there, and he had no idea that this announcement was coming. So think about that. Like, I almost envisioned it like that Lord of the Rings at the beginning when he says he's leaving and putting on the magic ring. I almost imagined Buffett was gonna put on a magic ring at the end and disappear in front of everyone's eyes. It was that funny. But here, maybe we'll turn it on here.
Two of the directors, who are my children, Howie and Susie, know of what I'm going to talk about there. The rest of them, this will come as news to. But I think it's the time has arrived where Greg should become the chief executive officer of the company at year end. And I want
What do you think? As anticlimactic as ever. He's like, uh, I think yeah,
Yeah.
I think I'm gonna leave and I'm gonna
I
disappear now.
I think it's cool. I mean, it's not like Greg didn't see it coming eventually.
Right.
Like, I think this has been in the works for quite a while, but I'm sure that was quite the shock for him. Uh, and actually, bit of a negative reaction by investors after this, maybe more so just to like kudos to his investing prowess. But by saying he's stepping down, Berkshire shares dropped, I think, 4% on Monday. I guess a couple discussion questions. Yeah, I kind of shrugged the shoulders as well. A couple discussion questions. Are you surprised by the reaction at all? Do you think this deserves to trade at a cheaper multiple without Buffett involved? And I think he's still going to be involved and kind of be sort of an advisor to Greg and probably involved in a lot of decisions. But
An
let's say he
advisor
was,
from, on high, Ryan? I mean, it's it's good he's gonna pass away soon.
y- yeah, maybe. But I mean, even in that clip that you showed, he mentioned that he's going to stay on and he'll be a part of the decisions. If he isn't involved at all, though, let's say year two down the road, do you think this deserves to trade at a cheaper multiple?
Eh, no. It's already trades at fairly cheap multiple. I just don't. This doesn't excite me whatsoever. The one concern, as I was trying to think through who has the responsibilities here, and maybe this is where the uncertainty would come from, is back in the day, or up until this moment, all the capital allocation decisions were technically from Buffett, which includes the investment portfolio. Now he's been brought on Todd Combs and Ted Weschler to manage part of the investment portfolio, and then eventually, I would think, take that over, as Greg Abel is more of a business operator, not much of a stock investor. But now we have Greg Abel as the CEO and these two guys running the stock portfolio. My question is, how much cash do they have to deploy? Is it like a fixed amount of money that they get? Because Buffett had the ultimate flexibility to invest a ton into stocks or draw down that portfolio and acquire a company back in the day. Is there still going to be that flexibility from the management team? And that would be my one concern of where there could be conflicts of interest, where back in the day, Buffett could just do whatever he wanted.
Yeah, that's a good point. I imagine there's some structure laid out in terms of percentage of the assets that's allocated to various, like
But that's
whether
still that's still
that defeats
restricting.
the flexibility. Yeah.
And when Buffett's gone, what happens? There, I could see tension building there. And who you get a fixed amount of money. Again, I don't know if it is a huge deal, but yeah. And if you look at these businesses, yeah, it's fine. But they talked about how the railway and the energy businesses are not that great. They're fine, but they're struggling. Going to need a lot of money. The energy business is tough from a regulatory standpoint. The insurance operations seem fine, good. I mean, good, as good as ever. It's a great business, but they have $300 billion in cash. Do they have anything that they can invest in? Maybe, but I would be worried given what Todd and Ted have invested in, of how that could impact the overall stock portfolio. I see things like SiriusXM, RH. What are some
Do
other
you think
ones?
the Sirius XM was
Oh, it's
Todd?
definitely not Buffett. Yeah, too small.
That investment concerns me.
It's not, well, yeah, I have high conviction against SiriusXM. The fact that no one under the age of 50 uses it.
I
Yeah.
mean, maybe it's like, okay, I honestly haven't done that much valuation work, so I'm sure these guys are sharper than I am. But all the like most important, it's not a business. I can't imagine that they are running these portfolios as like buying cigar butts. Like, this is Berkshire. You have huge money to play with. You need businesses that are going to grow. It's nothing tells me that SiriusXM is going to grow. Their revenue per subscriber continues to decline, and their number of subscribers continues to decline. I
Yep.
don't see
And
why
they
that would
have $10
change.
billion in debt.
And maybe the biggest concern I would have if I were a Berkshire shareholder is they still have a pretty massive Apple stake, and a lot of news hit this week that I think is actually kind of a big deal, and we can talk about it. Do you want to go through, I guess, what was said by Apple at this hearing and how it affected Google, and then we can talk about like some of the other. I think it was a separate hearing regarding the in-app purchases stuff.
Right. So a lot of people want us to talk about this. We'll get to earnings, so don't worry, everyone. But Apple Services President Eddie Q was testifying in court this week, and the visit was over the Google's illegally ruled, say, domination, monopoly of the digital advertising space. And he said during, testifying, where you can get a lot of people to speak, like, frankly and honestly, because they're under oath, as opposed to on a conference call when they say, well, developments are good, Apple Intelligence is great, we're working on it. But he said searches, and I think when he means searches, he means Google searches on Safari, which is their native browser on the iPhone, declined for the first time in April. And he said they would look to add other AI services like OpenAI, Perplexity, Anthropic for search options. Now, this caused Google stock to fall, or Alphabet/Google stock to fall. What is also a concern, and where we may be seeing Apple and Google trying to play, I don't know, save their profits by just making arguments that competition is strong, things are different than they were 5 or 10 years ago. Because part of the remedy for Google's antitrust case is that they may not be able to pay to be a default search engine on hardware devices such as Apple or Samsung. And Apple gets estimated $20 billion or more in pure profit from this deal every year. And Apple might be saying, well, look, there are a lot of competitors here. So don't take this away from us. This is a fine a fine deal, and that the reason they could be saying that is not because they actually believe it like wholeheartedly. It's because they want to make people believe that Google's domination is not there anymore, and they want to save this $20 billion in payment. I was interested to see Google stock fall in the news. Apple's didn't react too much. What were your thoughts, Ryan? And maybe we can get into some of the implications here because for me, people can kind of hear it from how I'm talking here. I still think a lot is up in the air. We just don't know.
Yeah, so first off, Google responded this morning with a press release, and they said the title was "Here's our statement on this morning's press reports about search traffic." So I guess it came out the day of. We continue to see overall query growth in search. That includes an increase in total queries coming from Apple's devices and platforms. On the one hand, it's like, okay, that's reassuring,
So Chrome. So Chrome's growing share, maybe?
but well, potentially. But the other part that's kind of vague here is like we continue to see, or that includes an increase in total queries coming from Apple's devices and platforms. That doesn't necessarily mean like Safari on the iPhone, which I think is probably where Safari gets the most use, as opposed to like a lot of that search volume or search increase could be coming from Mac devices, for example. So ultimately, that is something I kind of flip flop on this all the time. There is the chance that Google Chrome has just been stealing share on Apple devices, and the search volume is coming from there as opposed to search volume through Safari.
Well, there's
How,
data out there that's true. I think it's about 50% share now.
but is it enough to offset the decline? I don't know. And both companies, like no one has said we don't get total query volume. So you kind of have to do a lot of guesswork here. I really don't know where to stand on Google, honestly. There's no doubt that more and more searches are coming off of Google. Like I think ChatGPT has 400 million monthly active users, Perplexity gets 100 million queries a day, Grok has like 17 million weekly active
Yeah.
users, something
All
like that.
people in replies getting misinformation. Some
Yeah, those
stupid thing
are
on Twitter.
incredibly annoying, but people certainly use it, and I'm sure everyone has noticed, probably friends using it, people, like conversational AI gets more usage, and that means searches are going away from Google. Paid clicks also grew at its lowest rate ever, I think, this quarter. However, they grew. Like so it on the one hand, yes, search does not deserve the multiple that maybe it commanded in 2015. But if it can still grow, I don't think it deserves to be treated like it's going to zero. Because there's no world, I don't think, in the next 10 years where Google still doesn't have a huge chunk of search share. So, in terms of like Google's valuation today, and for the record, it's trading at, I think, its lowest earnings multiple, roughly, or at least in the last decade. EV to EBIT's slightly higher than its 2022 lows, but basically 14 times EV to EBIT,
Trailing. Well,
trailing
pretty cheap.
14.8 or something like that. I think even if you don't believe in search that much, even if you don't think it can grow, I think you can still get good returns from here.
Yeah, it is. There's a lot of, I say this one a lot. There's a lot of variables at play. When you say 10 years from now, Google search will still be, it exists, but it's just, well, if revenue is declining, they're going to slap a whole new multiple on that. And it's not worth as much as we thought. I've tried, look, on the one hand, you see the usage here, but on the other hand, and maybe I'm just not trying hard enough, but I needed more storage on my Google Drive, so there's this $20 a month. It's like this Google package where you get the extra storage over the free tier, and then you get access to the latest and greatest Google Gemini products. Which, for anyone that doesn't know, those are the OpenAI, ChatGPT competitors. So I get Gemini something something advanced. I've tried it out. It creates some good historical stuff for reading companies. You can take stuff from websites, and I want to use it more, but I don't find myself going there all the time versus Google, where if I'm looking up, for example, flights or hotels, I'll still use Google. So maybe that changes someday. Maybe ChatGPT is that much better. I haven't used them lately, um, but it is definitely a risk. We talked about it last week. But who is it a bigger risk for? Apple or Google? I would probably lean Apple from a profitability standpoint, and perhaps just given the fact that they haven't seemed to be able to do anything at all within AI, where Google is actually fairly competitive within this market, their moat, their seamless operating system, their power within the consumer electronic space could start to deteriorate if AI matters more, wearables matter more, all that stuff. And you could see, we haven't even talked about this App Store thing. You could see this $20 billion payment go away. And I think it's more of a concern for Apple, even though Google search is the number one target right now. At least Alphabet has the capabilities to try to defend itself.
Yeah, I think I'm surprised Apple. Well, I guess nothing surprises me that much with Apple anymore, but this week seems like it would have been a huge down week for Apple, given some of the stuff that came out around the court ruling, even this Google news, because yes, that is a $20 billion bribe basically out the window, which is huge for their services business. And actually, I think it's more than 20 billion at this point. I think it's gone up.
Probably higher, yeah.
I think it
Yeah.
was around like 30 last time I was quoted. But this, I think this is another one. There was the in-apps purchases, like Google antitrust case. I forget what the name was. Probably DOJ versus Apple or whatever. And this quote that you have is a massive deal. It says, "What this I'm not sure where you got this,
So
by the
this
way.
is not a sorry, you said Google. So
Sorry,
this is the
Apple.
Apple in-app store case where there was a lawsuit from Epic Games to say that the 30% fee on in-app purchases was illegal, say discriminatory, where some apps like Uber don't have to use it, some apps like Epic Games have to use it, and they would stop people or stop app developers such as Netflix, Spotify, dating apps, Duolingo from directing users to a third party or their own payment service that could bypass this 30%. And even if they tried to bypass it, they would still charge, I think, a 27% commission to offset that payment fees. So there was no way for people to escape these fees. There was an old ruling that got them to this middle ground, and then Apple was not really playing ball at all. They did that 27% commission thing. And now whoever was a judge, whatever the judgment, they said, look, you can't do this, Apple. You have to let links within the apps to direct to third party payments that will allow them to skip the 30% fee. Now, Apple can still charge 30% if you use their services, but you have the option to do both. And the quote here from this Twitter account says, what this means is apps like Netflix, Spotify, dating apps can just soon prompt you to click on a link, then open a browser like Safari with Stripe preloaded or whatever payment processor you want, and entirely avoid Apple's 30% commission. Now, this might not be as big of a profit driver as the Google search payment, but it's still probably sizable for them and extremely high margin. Even if it's 10, $20 billion in revenue a year, that's very, very high margin. So yeah, this is another headwind for them. You're probably going to see fees come down, and you're going to see companies charge less. Like they'll probably serve different prices. Like, okay, Spotify, if you purchase through Apple, is $10, but if you go off Apple, it's $8. Just as an example.
I would not be surprised if between the Google payment and in-app 30% commissions, those account for 50% of the services division's gross profits. I I think that's very possible. That is a huge hit to Apple's overall gross profits. And for for anyone that isn't familiar with how this has worked previously, like you see it with Spotify in a big way, where there's like throughout all of Spotify's history, if you had it on an iPhone, you could not sign up for Spotify on the on your phone. You had to go to a desktop browser, go to Spotify, sign up online, and then sign in on your phone because that's the only way Spotify could get around the 30% commission, which was it's kind of incredible to think they've gotten to basically 700 million active users without a native checkout. But
Well,
it's
you can do the free, like
sure. Yeah.
paid 200 and something million paid. Still impressive.
I just I don't see how this is not a huge hit to Apple.
No one
On
cares. It's a quote unquote good. Buffett owns it. It's a they're like, oh, it's a durable company. It's got high terminal value. It's not growing. Who cares? It's basically a bond. That's one of the most dangerous things you can ever hear when investors hit like the stages of denial and they go, well, it's basically a bond now. It's like, oh, okay. That's supposed to get me to want to buy this.
there was I've been to like a couple advisor type conferences lately, and I noticed that that whole what was the old saying like can't go can't lose your job buying
Buying
Disney or
IBM.
whatever
Yeah.
or
IBM
buying
and Intel.
IBM.
Yeah.
That is that totally exists with Apple today. Like if Apple really struggles, it's like, wow, I mean, it was the best company in the world. Who could have seen that coming? But like all the indicators, if you if you had no idea what this business was, you just looked at the recent rulings, the recent growth, the saturation within its existing markets, you would think this probably deserves to trade at a mid-teens earnings multiple,
Right.
a Google multiple, not 30 times.
Yeah, and Alphabet actually has something that will like they have Google Cloud, which is doing quite well at the moment. So
No.
that's entirely different. But we have plenty of else to talk about on this episode, Ryan. Are we at a point where we want to do advertisement or do we want to talk about earnings?
Let's talk Blue Chippers Club, and then we got a couple of earnings reports to get through. Blue Chippers Club was started by two friends of ours. It is a tight-knit community of stock-focused investors, and inside this community, you can share, break down your portfolio, pitch stocks, receive feedback, and participate in weekly calls if you like. I've said it here before, but I love the weekly calls as long as I can make them on time. I love the weekly calls. It's great for feedback, and it's great to actually talk with other investors. I mean, Brett and I, as we do this podcast, aside from comments in the chat, we don't really get to talk face to face that much with our listeners. This is a perfect way to actually collaborate and communicate and actually, I don't know, banter over different ideas. So I recommend checking it out. It's bluechippersclub.com. If you're interested in joining, the link will be in the description. Once again, that's bluechippersclub.com.
Yep. Helps with that idea generation. All right. Coupang? A lot of people asking about Coupang.
Yeah, let's do it.
Well, another solid report, another solid growth numbers. If you look at the top line figures, you kind of need to separate out what the actual underlying growth was in South Korea versus foreign exchange rate and the different ways they're doing their accounting out. For anyone that doesn't know, we've had, I think, multiple either interviews or stock research episodes on Coupang. So if you want a full breakdown of this East Asian e-commerce company, go find those within our podcast players. It's pretty easy. Just go search it. But they had 11% revenue growth last quarter, but 21% growth on an FX neutral basis. So that means that the US dollar was appreciating versus the South Korean won, but that has reversed so far in the last couple of months. So I think that's good. That's going to help, just earnings in US dollar terms. But if you look at their gross profit, that grew 31% FX neutral. And that's what we should care about because the way they are transitioning their business model is they're performing one of the maneuvers that Amazon did where they're becoming a facilitator of third-party sellers. So they have all these sellers joining their platform that aren't actually selling to Coupang. They're just selling directly to consumers and they're taking a take rate off of that. But instead of counting all of that as revenue, which they did in the past, they're now counting it as gross profit. So gross profit is going to be the best top line figure to look at. They had positive operating income. They had 8% margin for their product commerce, which is their legacy, like just e-commerce platform business. It doesn't include food delivery. It doesn't include the expansion internationally. It doesn't include fintech or anything like that. They had 78% revenue growth in the other segment, which is the developing offerings, which was on top of 143% year-over-year growth, organic growth, excluding Farfetch last year. So really tremendous growth. From that standpoint, they are starting to buy back stock. They announced a $1 billion share repurchase authorization. It'll be, I think, for me, some of the uncertainty here is looking at how aggressive they're going to be with this buyback. They could take out $1 billion within, a quarter, given their balance sheet. They don't generate that much in cash flow, but they could be aggressive here if they wanted to. Gross profit margin, I think, has gone from under 20% just a few years ago to close to 30% today. So just really, really strong figures there. Yeah, I think Ryan's pulling that up right there. Great, great numbers. You can check out all the KPIs at finchad.io. Use our link, get a discount. Ryan, I believe you are a shareholder as well, I should say. This is one that's in my portfolio. What did you think of the quarter?
I thought this quarter was exceptional. Yeah, Brett mentioned the gross margin expansion. Over the last 5 years, they've gone from about 16% gross margins to 30%. And that's just it's them reaping the benefits of past investments in logistics. It's similar to Amazon in a way. Actually very similar,
The
where
only company you can truly compare to Amazon, with them and Mercado Libre, right? Everyone else is not a serious comparison.
yeah, and there's actually one KPI I really like to look at, which is I think they have like logistics square footage.
Right. Yeah, I
Let
don't
me
know if
pull
they're
this
saying
up.
that anymore.
Yeah, okay, so it's gone from 25 million square feet of leased and owned fulfillment and logistics square footage to 67 million square feet, which it just goes to illustrate that the capex is not all growth, or sorry, not all maintenance capex. Like I think sometimes people worry about the free cash flow figures with a capital intensive business like this because it's uh I guess you worry that you're on like sort of the capex treadmill and that maybe the investments aren't going to bear fruit in terms of actually generating positive free cash flow down the line. But this just goes to show that a lot of it is growth capex and they continue to expand their logistics and fulfillment capacity. And something that I really like about Coupang, it's never going to look optically cheap. I don't think. It could be wrong. Maybe they have a good year of earnings, but it's one of those companies that continues to plow so much money back in to the business through capex, expanding their fulfillment capacity, improving their uh, fleet, paying labor more, like all the different true investments they can pour into their business. They continue to do that. So free cash flow and earnings tend to look depressed relative to what they could truly earn. So it doesn't screen cheap. And it honestly like reminds me of Amazon in that way, where all for the last 2 decades, they have been the it's been other than 2022, it never looked optically cheap. Like, it never screened cheap, but they were continuing to grow, like, the underlying earnings power of the business. It feels like Coupang is in that same vein, which for me, I'm totally comfortable with, and I think you probably have to just value this more on a gross profit basis and assume they can get to those 10% sort of bottom line margins that they've stated as their goal. I'm very comfortable owning this. I was actually bummed when the report came out. The stock initially dropped 2% after hours. Thought I was going to be able to buy more shares, but then the next day it jumped 10%. So I was a little surprised to see the reaction, but I'm happy as a shareholder.
Yeah, and hey, it gave back I think 4% today, so maybe in a little bit cheaper. We can even look at the product commerce segment, 8% margins. Let's say they can bump that up to 10%, which seems very doable given they're still reinvesting within this core segment. There is reason to believe, unless the Korean won gets depreciated by half versus the US dollars, that they can get $40 billion in revenue pretty soon here from this product commerce business. 10% margin on 40 billion in revenue is $4 billion in earnings, which is excluding the developing offering segment, which is uh, Taiwan, Coupang Eats, which are both doing fantastic, Farfetch, stuff like that. You have $4 billion in earnings. The market cap right now, I mean, the enterprise value is like 40 billion, maybe closer to 45 right now.
Yeah, and the
That's cheap.
fulfillment,
It's
yeah,
cheap on those numbers.
the fulfillment and logistics uptake from merchants has been phenomenal too. It's not like they just rolled out. There's so many times where you see companies roll out great ideas, but the execution just isn't there, and you actually don't really see it show up. We're totally seeing it show up in the numbers. Correct me if I'm wrong, but the third-party merchant services revenue, I believe, is primarily FLC, if I'm not mistaken.
Honestly, I don't know what's maybe
I would
advertising's in there. I'm not exactly sure.
Either way, I mean, this is probably better economics than you get in the true core product commerce business, and it's just grown like a weed. It seems like they're willing to invest and try things and cut them if it doesn't go well. For example, I think they initially tried to expand into Japan, didn't work. They weren't seeing the benefits. They weren't afraid to stop it. Whereas if they do see the benefits, they signal that it's providing a lot of value to customers. They continue to pour money into it. Seems like that's what they're doing. This is probably the holding I'm the most optimistic about at the moment. My own personal holding.
What about Remitly? Come on, that's another well company that's doing well.
Yeah, I feel a little more comfortable with Coupang. I think Remitly
Yeah.
could have higher upside, but I feel like there's a bigger competitive advantage with Coupang.
Yeah, I agree. Now, sidebar. This is from a commenter. Do you remember Dave, Ryan? The stock
Yes.
up 42% today.
Whatever. I honestly whatever. It's just like is it
Why are they named Dave?
wasn't it the financial was it
Yeah, it's
payday loans?
some fintech thing that was one of your small caps of the week.
Maybe I can go find those notes. I'll look through here. But up 42%. Oh my gosh. Like it feels like every 3 years there's a new fintech that's like disrupting lending and it
Lending, yeah. How's Upstart doing? Actually, I think they reported this week. Wow. Let's see. Back to $50. Good for Upstart. There we go. All right. Do you want to talk Uber? We'll rotate. Excuse me.
yeah.
Rotate to one of yours.
Yeah, let's talk Uber. In general, I thought the numbers were pretty good. I think investors maybe had slightly better expectations, but if you are looking at it on a quarterly basis, they did have their first ever sequential decline in gross book. Sorry, not first ever, first since COVID. Sequential decline in gross bookings across the whole business, but there's some seasonality, so that doesn't really matter. Trips grew 18% year over year. Revenue grew 14%. Delivery grew. The revenue grew a little quicker for delivery than mobility, but both had pretty strong growth, and margins expanded. And if you look at the free cash flow chart for Uber, this is like every VC's dream. It goes just from like them hemorrhaging money
Yeah. How much this is
to,
going to lose people in other businesses money by? We'll do the Uber playbook. It worked for them.
yeah. I mean, I think what's maybe the VC's dream about this chart, and maybe you can pull it up,
I'll pull
Brett.
it. Yeah, I got it. I got it.
Yeah. So they went from negative $5 billion in free cash flow at the bottom, which was Q2 of 2020, to now generating positive $7.8 billion in free cash flow. I think what is so even though this is like a super risky strategy, and frankly, when Travis Kalanick was in charge, it seemed like they just had no control over costs. It maybe like deepened their advantage, I guess. like it could have, like them being able to lose that much money made it that much harder to
Oh yeah.
compete with them. So that on the other side, the cash flow and the benefits and sort of the light at the end of the tunnel is that much larger because now you've got Lyft who's struggling to survive.
Yeah, they still have decent market share in the US, but I guess yeah, Uber can use their bundle and international to kind of compete them away, maybe, but they'd probably rather have them stay around so at least there's some competitor out there.
Let me
Another good business. Yeah,
Yeah.
it's good business. What
Yeah,
free cash
it's a
flow
frame.
might is it misleading because of the collections or no?
Could
Probably
be, but I
SBC a
mean,
little bit.
yeah, it's misleading, probably more so because the SBC, uh, the if you look at it on a GAAP operating income basis, it still looks pretty good. The operating leverage has been there. The part that I thought was interesting here, because I don't own Uber and it's kind of maybe I'd put it in the too hard pile. I think really I'd put it more in the too expensive pile right now. Uh, the part I thought was interesting was the commentary around Waymo on the conference call. So Dara, I, I always botch his last name, but Dara, the CEO of Uber,
The CEO, yeah, hard one to say for us.
said, this is speaking about Waymo. He says consumers are loving the product. Opt-in rates are very, very healthy, and the ratings are healthy. The team on the ground is doing a terrific job in terms of repairs and cleaning and recharging the cars, etc., to make sure that the Waymos are available for rides. And then when the Waymos are available for rides, they are very, very busy. We are seeing very high utilization of the vehicles in terms of trips per vehicle per day. As a matter of fact, the average Waymo in Austin is busier than 99% of Austin drivers, as defined by the number of trips per day per Waymo as well. So very, very encouraging. He says we're looking forward to increasing the vehicle count and expanding into Atlanta. Here's my, I guess, two questions. First of all, it, do you think that the most likely outcome here is there's just a bunch of partnerships and kind of licensing fees between the aggregators like Uber and the uh, automated vehicles like Waymo? Or do you think them bragging about Waymo on the conference call is potentially like the more light they give to it, say Waymo were to strip away that distribution somehow, don't you think that's kind of like a hidden dagger for their business?
Right. Yeah, they better I know we've talked about this one before, but they better hope more players come to the space because if Waymo's the winner takes all here, well, the power resides with them at the end of the day. I still continue to be confused at people that don't think Google can just push one notification to Google Maps and say, "Download the Waymo app. It's in your area," or send it to your Gmail, or they have this distribution advantage that they can use. Now, on the one hand, I'm confused, and he does like the word "very" in his quote here. So they said the average Waymo in Austin is busier than 99% of Austin drivers. So that means
Ubers.
Uber
Uh,
drivers,
yeah.
and then defined by the number of trips per day per Waymo as well. So he's saying that when it's on Uber, Waymos are more busy.
Yeah. Relative to a typical Uber driver, Waymo is doing like way
But what
more
about
trips per day.
Waymo? Are Waymos more
Waymos are
busy?
exclusively on Uber in Austin.
Okay, so they can't compare. But maybe to other cities, they could see better data of utilization rates because they need to have high utilization rates, just given the higher overhead costs from tech and whatever for
Yeah.
uh,
The
for those.
one, I guess the one argument that I've been hearing is that in favor of Uber is that it's harder to run a network like this than people anticipate. Like, for example, in this quote, he talks about um, the team on the ground is doing a terrific job in terms of repairs and cleaning and recharging the cars. And there's like more to it than just
Storing
check
inventory,
out
yeah.
this app. Like it's a very, it's not just a atoms problem. It's not just a bits and digits. It's an atoms problem. It's a real world like business that they have to run as well. So
Sounds expensive. Uber can do it.
yeah,
I think Waymo would be happy for Uber to do it, but yeah, maybe it all sits on Uber. I don't know. Uber has, yeah, great distribution, But
I would love, as a Google shareholder, for them to try to do all this in-house, but the fact that they haven't, I don't know, it tells me that
it's
maybe
fine.
it's harder than it sounds to just own
Y-
that ecosystem.
Yeah, I think they also may be testing. They're in what, Phoenix and Los Angeles and San Francisco on their own. They're going to test other cities with Uber. If they see any material difference, they can decide a path forward. But again, I come back to, if autonomous vehicle taxis are the future, then every year, and Waymo, I mean, is growing at a phenomenal rate. Every year they gain more market share. If all of those are Waymos, I think Uber loses power in the relationship, and that would just be concerning to me over the long term. That's something similar to Apple and Google as well. But Google, again, I understand why people own it, because it's trading at sub 15 times earnings with some very promising growth subsidiaries. But you have that looming risk. I just don't know why I would overpay for it. I get that free cash flow number. I mean, what's their EV to EBIT right now, Ryan? Do you, do you have the
Uber?
ability to pull that up quick?
Yeah, I can. We have a comment here as well in the chat saying, you guys listen to the Google call. It's very clear Waymo wants Uber to help them. And also, there are updates every day on new Uber partnership, Zoox in Vegas.
Zoox has like one car. Come
Yeah.
on.
And actually, I
Uh,
think Dara said that in the call. Like, Waymo continues to be miles ahead of everyone, and they're kind of currently the only player in town. So, despite the partnerships, I think the results speak differently. Ratio, so EV to EBIT on Uber, currently 47 times.
trailing, yeah. I mean, I like this at 15, but why am I buying this at 47? I don't know.
Yeah.
Yeah, not for me. Not for me. Hey, I hope it works. I think it's good business, but we've talked about it plenty of times. It's similar to that Google search risk, where if you believe differently than what Mr. Market's saying, you can make money. But Uber, it seems like Mr. Market is not discounting this risk at all.
Yeah. Yeah, I mean, it's helpful that Google's so upbeat about them. But let's talk, we've got a couple more earnings to get to. You got Portillo's and Remitly.
Yeah.
Now, I would prefer if you started with Remitly, but
Are you a Portillo's shareholder, Ryan, or no?
not a
Not a
Portillo
shareholder. All
shareholder.
right, so I'm the only one here. Hey, the stock did okay after the report, and people were saying it's a buy because the new pope is from Chicago. Yeah, that's just a joke. It's not going to affect anything. Yeah, and Remitly did better, but Portillo's, we'll still call it a solid quarter of progress, but early innings on comp sales turnaround. 1.8% comp sales growth in the quarter. Solid improvement from negative numbers in 2024. Positive operating income. They slightly increased their guide for comp sales in 2025. Now, there was a concern because they had a slow average unit volume starts at their new restaurants in Texas, which I guess is a different problem than they used to have, because they would hype up these openings, and then all the people that knew about the brand would come in from these places that they hadn't been in these cities before. I think that is something to watch out for. They mentioned that they don't have that many stores in these areas. And, for example, one of them in Houston had a bunch of construction going on to start out, and it's only been a couple of quarters. So, like, they'll see. They'll see. And they said that they're still seeing the same customer satisfaction numbers. So we'll see then the figures going forward. What's funny, though, is that investors might end up being happy that they start slow, because it makes the comp sales growth that much easier, when in reality you're going to be generating less in net earnings. I honestly think that investors would buy up a restaurant that opens at 500,000 in revenue and then does comp sales at an incredible level to 5 million, versus Portillo's, which can open at $6 million and then just stay there. That's a story for another day. It's really not too much of a crazy earnings report. Pretty much everything in line, besides that one little concern people have. And then they bumped up that comp store sales figure, which is good, I think, because a lot of restaurants are struggling at the moment. Right now, market cap $750 million, EV slightly higher. I still think there is 10 bagger potential here with this stock, but it doesn't come without risks. This is not the cleanest story. And the one thing I'll be tracking above all else for the rest of the year is simply comp store sales growth. If it keeps accelerating, stays in that positive 2, 3, 4% range, or gets there, it'll work.
Are you more or less confident than you were when you first came across this business that this could be a national chain?
I'd say no different. We're still in wait and see mode, but they are getting solid AUVs at these the Dallas location. I would say what they said on the conference call is that there's no reason to think Houston and Dallas are that different. Um, so yeah, they're not going to get $10 million average unit volumes like they do in Chicago, but I'd say the same. And just got to watch comp store sales. It's moving in the right direction. So I'd say this quarter, incremental progress. But we need to see multiple years of 3 to 4%. I think there's some ways they can do that. They have the loyalty program. They're investing in better drive-through technology. They have kiosks. They're trying to clean up the operations that kind of got behind themselves before the IPO. And we'll see if it works because people seem to like the food.
Okay, you want to shift gears to Remitly here? They are
Remitly.
up, I believe they closed up almost 15% today, if I'm not
All
mistaken.
right. Not a bad day. Yeah, 14.5%. Spruce Point short report gave everyone a little buying opportunity, didn't it? All right. Well, send volume up 41%. I know we're giving a lot of numbers here, but only a couple numbers. Send volume up 41%, revenue up 34%, improving unit economics, and improving marketing and overhead cost efficiency, which is leading to bottom line margin expansion, positive net income for the first time. Their guidance remains conservative, I think. I think they're just trying to not, it's guidance. Who really cares? And the stock is up, but I still think it's cheap. What kind of, and again, this is, I'll shout out our friends at FinChat who are supposed to do an ad for every episode. This is the perfect week to use FinChat, use our link, and get a discount on any paid plan. The link will be in the show notes. We've used them throughout the episode. Yeah, Ryan's using one of the KPIs you can only get over at FinChat. Active customers. And what's that growth rate? I can't see it on the shared screen.
50% CAGR since 2019.
Pretty good. Pretty good, Ryan. And I can pull it up. What is their last 12-month revenue? 1.35 billion, growing 30% right now. They're guiding for 25%. I mean, if we even slow down to an average of 10 to 15%, I mean, they can get to $5 billion in revenue given the opportunity in the remittance market going global. I mean, the rest of the world is growing really quickly. They can get to $5 billion in revenue. And given the unit economics of a remittance provider like this, $1 billion in earnings on that, so about a 20% margin makes a lot of sense. And their market cap's $5 billion. So I think a lot of runway for this stock if they keep growing revenue.
Yeah, their North America revenue has almost surpassed Western Union's North America revenue, which is nice. And the thing I liked the most, the risk kind of coming into this year and what everyone I think a lot of investors have concerned themselves with is the immigration situation and people being worried that if there's a lot of people that are export or uh, removed from the country, that it's going to affect send volume. This was a quote that I think paints a picture of their customer compared to, say, a Western Union customer. So this is on the conference call. He says, as a digital only player, most of our customers fund their remittance transactions using a card linked to a bank account, which means that they're able to pass bank level KYC, know your customer uh, regulations or security checks, signaling an established presence in the country. This contrasts with cash based providers that often depend on labor intensive, decentralized processes that are harder to scale, more expensive to maintain, and more prone to inconsistencies or fraud. These controls are routinely subject to regulatory exam and supervision. So it's just to say that they probably are not as at risk as, say, a Western Union. And if this quarter was any indication, uh, it really has not. The deportations, I guess, has not affected their business at all. I think that risk in
It's not gonna.
general was overblown.
It's not gonna affect their business. Yeah, that is just not a risk. And if people get, and I'm not saying this is good or bad. I want people to get separated from their families. But if they're forced to go back, to example, Mexico, they probably have family in the United States, so they're going to send it just in the opposite direction.
Yeah, it's not like it doesn't like clean cut them off from the app type of thing. Like it, I don't
Yeah,
know. I think that risk is just way overblown. And Remitly, even after today, it's still a reasonable price for a business that should probably be able to grow revenue and gross profit at 30% for, well, 20% plus, I should say, for quite a while. And I think there's tons of operating leverage in this business. And we have been using FinChat all day. It's great for earnings season, fantastic for earnings season. FinChat.io/chitchat gets everybody 15% off if you're interested in checking it out.
and a lot of people have been doing that. We appreciate you signing up because hey, helps out our business a little bit as well. Are we running up on time, Ryan? You have one final topic. Did you want to do the earnings studs and duds?
Sure, yeah. I just wanted to pose this question to you. What were the best and worst quarterly reports you've read so far? Maybe any that have surprised you that like you don't typically read, or companies that you don't follow on a regular basis.
That's hard. I'm trying to think through. I mean, there's some that I follow. Like I think the one that came to mind first is Remitly. I'd say a bad one, maybe Altria. I'm very concerned about their volume declines with these kind of new nicotine, healthier nicotine products coming into the United States. If that correlation is correct, and we're seeing further acceleration in volume declines, they better watch out. Besides that, I don't know. Did you have any in mind? You follow a lot more for the charting on the
Yeah.
FinChat account.
Ultra is a good one. I like to see a deceleration in their
Right.
volumes was a little
Decel. Yeah.
surprising because we're seeing like I thought last year because volumes were declining really quickly. I think like almost 10% year over year at this time last year, and I thought, okay, hope I imagine things will swing back. So to
It'll
see that
normalize. Yeah.
deceleration was surprising. The other report that I thought was just terrible was Block.
Oh,
Cash
block
App
XYZ.
Cash App has stagnated completely.
And it's just a coincidence right after that short report about people using it for crime came out. They're
Yeah,
KYC. Talk about KYC. That's nothing. They're that guy at the security gate, just letting everyone through.
yeah. It's
N- n-
I was pretty underwhelmed with that report, and then the Square ecosystem itself, like the seller ecosystem, I think it's doing okay, but if you look at it in context to like or in
Toast.
relation to Toast, they're getting, pun intended here, toasted. It's seems like Toast is just winning that battle. I know they kind of cater to different audiences, but there's definitely some overlap there as well. Even if you look at them relative to Shift 4, they're just not winning on against the other point of sales providers, but maybe the market's so big it doesn't matter. They can all continue to grow.
No, yeah, I can continue to grow. I was looking at some of the big earnings players that I just kind of was trying to refresh my memory. One that disappointed, McDonald's. I don't get owning this at 28 times earnings with bad comp sales. It just feels like, all right, it's one of those again where someone might say, well, it's a bond. It's a bond. And that, again, is the biggest red flag for me. And then another good one, I'd say Meta Platforms. Zuck says we're all having AI friends, Ryan. You better say goodbye. I'm going to have AI Ryan as a friend going forward. I'm replacing you. I'm only digital going forward.
Yeah, let me rip through some of the reports and see if I found any real winners here. There were a couple that surprised. I guess Shopify was okay. Trying to think here. You know who actually
Well,
had a
Dave,
surprisingly good
Ryan, come
quarter?
on. You're a Dave hater.
Oh, I got a surprisingly underwhelming one here. Monster.
Really?
They just reported total case sales grew 1%. So volumes grew 1% compared to last year. That's their slowest
Global?
growth rate. Yeah, slowest growth rate, I think, maybe ever, or since the Hanson's Natural days.
The white
Uh,
chicks love Alani New, Ryan.
yeah,
Celsius had a bad report, I'd say.
yeah. I was pretty underwhelmed with that one as well. I don't know. I'm seeing some other ones. AppLovin actually continues to have really good earnings,
Yeah,
but
if
there's
those
some
numbers are
suspicion.
legit. Yeah, if the numbers are legit.
I saw like after that short report, I saw a couple like advertisers that were like, I think these guys are wrong. This is a platform I have like gotten a ton of value out of lately. So
Hmm.
I don't know.
Still
Maybe
trades at 75 times
yeah,
earnings.
yeah, unfortunately. It's oh, I wanted to share this stat to end the episode. Palantir
Oh
surpassed
boy.
Salesforce as the largest pure B2B SaaS company in the world, unless you count Microsoft. I think that's the largest B2B SaaS. Do you want to go through some of the numbers?
Oh, yeah, you go. Do you have them loaded up? It's
I do.
expensive.
Yeah. Okay. So Palantir, it might have changed a little bit. They were like basically the same market cap. Same market cap for what should, in theory, be essentially similar economics at scale. Like ultimately, it's B2B software. So it's not like one's going to have way better
Yeah.
margins.
One's got, and they both have high amount of sales people. I'm just trying to think through expenses. Yeah.
So if you could buy either one of these businesses, these are all the numbers I'm going to give you. You could buy the entire business yourself. One of them has $38 billion in revenue and does just under $8 billion in operating income. Okay. The other one does $3 billion in revenue. So about 8% as much revenue and $406 million in operating income. So about 5% as much operating income. Isn't that insane?
Yeah. It's insane. Palantir is an insane stock. It's in no man's land. What did I say? It's in the Shopify 2020 territory now of just craziness. And yeah, it's not going to work from here. I'm highly confident in saying that, just given the numbers. But it's got a rabid fan base. I can already hear the people, oh, you just don't get it, dude. You just don't get it. You don't get this. Oh, they're
If it
revolutionizing defense tech.
if it grew, let's call it 25% a year for the next 10 years, which look, I know that sounds super achievable, but that is hard to do.
Yeah.
It would like they
Still
still wouldn't even
overvalued.
be near Salesforce's numbers,
Yep.
and they've already got the market cap for it. So, it could still be a great business and not be a great stock. But anyway, I think that's going to do it. We're up on
Yep.
time.
Going a little long on time, Ryan. Anything before I hit the disclosure and get out of here?
No, someone asked me to talk about SEMrush. They did report, I think, yesterday. I might do that as my small cap of the week next week to force myself to revisit them.
How has the stock done? Future small cap or no?
It's looking like that at the moment. Yeah, future small cap of the
Future
week.
small
I
cap.
think it
That's
might
what
be a
that's
small cap. So
yeah, you should do
uh,
small cap of the week and I'll do future small cap of the week, which is like a short reports. But all right. Let's get out of here. Thank you everyone for listening. Remember, we are not financial advisors. And remember, especially on these episodes, nothing we say is formal advice or recommendation. We may own securities discussed in this podcast. And in fact, we do as of this recording. We may have held them in the past, and we may buy, sell, or hold any of these stocks in the future. Thank you, everyone, for tuning in once again. Remember, live 2 p.m. Pacific time, 5 p.m. Eastern time on Thursdays on our YouTube channel, or listen to the replays on YouTube, Spotify, Apple Podcasts, wherever you get your podcast. Thank you, everyone, for tuning into the live show with all the comments. We really appreciate it, and we'll see you next week.